So the beginning of 2023, there was two stocks I loved, and it was Google and Fortinet. Now, Fortinet hit a high of 70, and as you can see of this video, sold off to about $53, and this is where I said this is a great opportunity between $45 and $50 on Fortinet. And you can see here, Google was trading for $98 a share, and we were recommending it between $80 and $90, and as you guys can see down at the bottom here, it hit a low of $83. You would have had the opportunity to buy Fortinet and Google. These were two stocks that I was extremely bullish on when we looked at macro perspective, and I thought both valuations were very, very reasonable when we consider growth rates here. Now we take a look at Fortinet from those levels, and you guys can see here that basically has went up about 80 to about 81%, now trading above $100 a share. And from those levels, Google also made a nice run, actually outperforming Fortinet at up 115% from those levels. And then we see Google tumble based on cloud revenue and the fact of Capex. We're watching a lot of these Mag 7 stocks now sell off on Capex, including Amazon stock as well, going from over $240 a share now back down to about $229. And it's becoming a race to who can spend the most on AI. And of course, this is going to scare investors because when we think about discounted cash flow analysis, take the operating cash flow minusing out those capital expenditures. And after earnings report, it seems like whoever can spend the most is kind of showing off here. We had Meta come out saying it was going to spend 60 to 65 billion, and actually after the Mag 7s reported what they were going to spend on Capex, Meta's response was actually the best. Google came out and said they were going to spend more, 75 billion. Microsoft had to one up Google and spend 80 billion. And then Amazon's Jassy came out and said the company's expecting to spend $105 billion. But one of the most impressive things about this last earnings was AWS margins and growth, and they are leading the pack with a dominant lead here. So when the market has unknowns about the future, obviously we get a repricing, which is now putting Google in a historical interesting spot here, trading at a forward PE of 20 times, which is actually putting it in very much value territory when we look at 2026, trading at 17 times earnings with 14% EPS growth coming and with 11% top line revenue growth projected out. Now, if you think they're going to deploy this capital extremely well, then this is one of the best buys, I think, on the market when we look at the Mag 7s. So we look at return on invested capital, they received a 21% return, which is actually much stronger than Amazon. Now, the key with Amazon is their capital expenditures have been extremely high for a long period of time, but their EPS growth here is going to be extremely strong. I actually think they can do over 20% EPS growth, but with these capital expenditures, maybe not. So with that being said, Google's the one I actually want to break down because I do think it's closer to value territory, and with the way they deployed capital, I do think that they could actually outperform here. Now, of course, if Amazon keeps selling off, then we have to go back to the drawing board here and start breaking down Amazon. But I think Google's starting to approach a pretty interesting area overall. I think when we look at valuations here, it's very, very compelling. So it's still in this nice uptrend, which it might come back down in test around 174 to 175. And if we kind of line that up with recent highs and recent support here, this should be a good line of support coming in here if the stock keeps selling off about this. Call it 173 to 175 buy area. So if we get a break below 177, I think this zone right here would be pretty interesting to accumulate shares. It's still in an uptrend, and I do think it maybe find some support around 157, worst case scenario. So if you're able to get in around this 170 to 175, I think that's a pretty interesting average in here. And obviously you want to give yourself some other chances to possibly get in a little bit lower here. So I'd be looking for other supports, but this is the initial support that I'm personally looking at here for a possible buying opportunity. So when I run my models, I'm basically looking between 150 to 160 from an ideal standpoint here. So I mean, maybe it gets down to those levels, but as I showed you from the technicals, I definitely think there's an opportunity to be capturing some around that 175 mark, which is not much further to go here. And we're starting to look at a market that's actually starting to turn over as well. So it's a pretty interesting setup here. Maybe we do start seeing 150 to 160 in Google just because of market sentiment, which could lend a buying opportunity for me personally. When we line that up, that basically means the bottom of where my technical analysis lines for a ideal buy zone here. So I think that's actually pretty interesting as well. And when we look at an older technical chart that I did on the S&P 500 here, we can see that it had a nice uptrend and broke out of this ascending triangle, as we can see here, broke out of the ascending triangle and just skyrocketed up. Now we take it down to a 1-year chart here. We can see that it is in an uptrend, but what we're starting to notice here, it's having a very, very hard time breaking out above about 60.75. We can see it's been rejected multiple times. 1, 2, 3, 4, 5 times it's been rejected, and we're starting to get what looks like an M pattern formulating here. So maybe we see the S&P 500 test this trend line around 5,900, which if we did see that type of sell-off here could impact things like Amazon and Google as a whole, which then would possibly put Google in that buying territory as well. So I do think this is a pretty interesting setup here and could be a nice setup for something like acquiring some shares of Google here at those price targets that I mentioned. As always, guys, this is just my opinion, some things that I'm personally keeping an eye on, but thought I would share that with everybody. Hopefully you all enjoyed, and we will see you all in the next one.